Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. The focus of my presentation and the focus of the Options-Doug chat channel in Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step of my process is execution. And I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups for entries and exits. And on-topic questions and comments are welcome. And I will be watching both the Options-Doug chat channel in Discord and the chat on YouTube. So again, please post your questions and comments. All right, let's get started. What I want to cover today, go over, wrap up the news items and economic data and events for the week. And then I want to do a quick review of yesterday, how you could have planned and recalled the large cap tech stocks especially have been very strong this week, and show how you could use part of my process in your planning for long setups. And then we'll go through our positional analysis, and then I'll talk about my plan for the day. I had a very specific plan, and then we'll go over setups. All right, so first of all, news. And today the consumer sentiment, University of Michigan consumer sentiment came out at 10 a.m. and it was lower than expected and lower than previous. And initially the market interpreted that as bullish and then quickly reversed lower a few minutes after. And then of course today is the big monthly expiration, and again there was remember there was an for the SPX an AM settlement for the monthly, and then the weeklies expire at the end of the month with the rest of the equities. All right, so that is the news. And then next week there's the FOMC meeting announcement on Wednesday, and that Wednesday is also the VIX expiration. All right, I want to talk about, and we'll look at that in more detail on Monday. Talk about the FOMC and the what the market is pricing in as far as what they expect the Fed to do on Wednesday. All right, so first I want to do a review of yesterday, and again, remember this week large cap tech stocks have been very strong, and I want to take a quick look at something from yesterday. So again, this is yesterday. And I talk about this every day as part of my planning. This is the my key gamma strike list and I look at the current key gamma strike, and that's in the D column, and I compare it with the key gamma strike for the previous day, and then I color code these green if that key gamma strike increased from the previous day, and red if it decreased from the previous day. So this was part of my planning process, and I'll go over this for today as well. So the next thing I want to take a look at, so the point here is you're looking at this, and I look at the changes in the key gamma strike to give me some directional bias in my planning. And generally, if this key gamma strike is rising, I'll go into Equity Hub, Spotgamma Equity Hub, and do further investigation and see if some of the additional levels were increasing as well, the put wall, the call wall. And again, I take that as a bullish signal. Generally, typically, again, that's a bullish signal. So I'm looking at primarily here AMD, Amazon, and Google. So this is yesterday. So that is, again, part of our pre-market, pre-open planning. And then the next step is to watch the hero signal after the open. And I typically post this in Discord. And notice here, now Google's not on this list. I have included that in my key gamma strike list, but I keep this list to this size so that I don't have to scroll in the hero dashboard. So Google is not on this list, but AMD and Amazon are. And the thing to notice, remember the key gamma strike increased in AMD and Amazon from the previous day. So that was one clue to look for those stocks to look for a bullish setup in those stocks. And the second clue after the open was just to watch this stock screener in the hero dashboard and notice these hero signals were strong. They're not as strong as they have been recently, but still very strong, especially compared to the other stocks. And what this is showing, it's comparing the hero signal today for the last 30 days, and that you probably can't see that, but there is a gray, slightly gray area that's showing the range for the last 30 days, and then the colored, it might be easier to see in Apple here. So in Apple, this light gray is showing the range for the last 30 days, and then the colored portion is showing the range for the last 5 days. So this is indicating for Apple, for example, that the hero signal is stronger than it has been, let's say about 85% of the time in the last 30 days, and then maybe 2/3 of the time in the last 5 days. So overall, and especially compared to the other stocks, all of these stocks had a strong hero signal. So that was another clue to focus on, instead of focusing on all these stocks and getting distracted. And I'm guilty of this as well. But the idea here is to focus on those stocks that have the rising key gamma strike. Watch the hero signal after the open, and this is confirming that traders are still interested in these stocks. They're interested in buying calls and expecting higher prices with a strong hero signal. So that, again, they're either buying calls or selling puts in these stocks, and that can help to move the stock higher. When traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. So then finally, And here's AMD. And notice the strong order flow at the open, and also the the breach of the call wall early in the morning. Right here. And Spotgamma has recently discussed this as an accelerant. All of these, so there's at the key gamma strike and the call wall, a high number of calls, and these calls go in the money. Traders continue to buy calls, and that can fuel a move much higher, as shown here with AMD. So as price continues to rise, these calls continue to gain value. And remember, market makers are short calls, so they have to buy stock to hedge their delta exposure. They want to remain delta neutral. All right, so that's AMD, and then finally, here's Amazon. So that's just a quick run through of the process for yesterday. And notice here, Amazon opened below the call wall in key gamma strike, and that was the final target for the day. And once price reached that level, it chopped around that level for the rest of the day. All right, so I just want to go over that. That was a reminder to myself as well as everyone else to just to follow a fairly simple process, and it can pay off. Okay, so that was the review of yesterday. Now let's go through our positional analysis. So let's go to the charts here, and this is Bookmap, the S&P 500 futures, ES. And before I dig into this chart, I want to take a look at a larger time frame, and this is the SPX, a 20-day 1-hour chart, just showing price and the key gamma levels from Spotgamma. These levels are provided to Spotgamma subscribers in a ThinkScript that you can download and update manually every day with the new gamma levels. And I'll just point out the key levels here, and then I'll talk more about these, provide a little bit more detail. So there's the put wall at 3,800, and now here's the 3,900 level that was expected to act as support today. And then 3,950 has been acting as resistance. And then here's the 4,000 level. That is the key gamma strike again. So yesterday, remember, the key gamma strike for SPX made a brief visit of the 3,900 after being at 4,000 for weeks and weeks, and now it has returned back to 4,000. And then the call wall up at 4065. And now the volatility trigger is at 3,950 also. So again, I'll discuss more about exactly what these levels mean in a few minutes. So that is a 20-day 1-hour chart. Now let's take a look. I want to take a look at another Thinkorswim chart, and this is another Thinkorswim chart showing the same levels, just on a smaller time frame. This is a 1-day, 1-minute chart, and this is showing that price opens up above the 3,950 volatility trigger level, tested a couple times, moves lower, And this is also the upper edge of the expected move for the week. And this is based on the options market and showing now that price is trading below that 39.50 level and the 39.42 level, which is the upper edge of the expected move. And the 3900 level did act as support so far today. And that was noted as support in the Spotgamma AM Founders Note. All right, let's take a look at Bookmap now. And this, I'm showing the same levels on my chart here. I have two columns of notes showing levels. This is from Spotgamma. These are the Spotgamma cloud notes provided. Spotgamma provides these levels daily for a variety of platforms, and for Spotgamma, for Bookmap, these cloud notes are updated automatically, and they're showing the key SPX levels and also combo levels, SPY and SPX. There's none of those levels are in play here. So this is the 3950 volatility trigger level, and that is Spotgamma's proprietary gamma flip level, and that indicates that market makers' position below that level is negative. Their gamma position, their position on the gamma curve is negative, and that means that traders are long puts, market makers are short puts, and they have to sell futures in the direction of price to hedge their delta exposure. That's in a negative gamma environment. And in a positive gamma environment above that level, they have to trade futures against price to hedge their delta exposure. So that in a negative gamma environment below that level, market makers trading tends to increase volatility since they're trading with price, and above that level it tends to subdue volatility. I'm just going to scroll a little bit so we can see here down below the 3900 level acting as support, and this is also showing one of the combo levels, SPX and SPY converted to an equivalent SPX number and then converted to an equivalent ES number. So right now Spotgamma is using a 30-point difference between ES and SPX, and I calculated it this morning at 32 points. So I'm showing that 3900 level up just a couple of points, and this is in my cloud notes, and I'm showing the key SPX levels. There's that 3950 level, and then I'm also showing SPY levels, and that's the SPY volatility trigger at 394, and there's the upper edge of the expected move. This is for ES, so it's going to be a little bit different than SPX. And then finally I'm also showing big round numbers for ES, and that's the 3950 and ES. All right, so the really the same thing holds here. Here's the reaction at the 10 a.m. data. Initially bullish, and then price quickly reverses lower and shifts from bullish to bearish. And I'm going to have to adjust the volume dots here a little bit larger. It's easier to see. And you can see the shift in order flow. All the green dots, these are market buy orders up to that level, and some stops fueling that move higher. That's shown by this rising orange line here in the subchart. Those are showing buy stop orders. And then order flow quickly shifts bearish. All the pink dots are showing market uh, all the pink dots are showing market sell orders. These are aggressive sellers and moving price much lower, and that fuels sell stop orders. And also notice the dark blue lines, the yellow line is the stop orders. The blue line is CVD, cumulative volume delta, and that is pretty obvious when you just look at these dots. And then also notice the large iceberg orders coming in right after the open, and that is shown here. It's easiest to see with this drop in the light blue line. Okay, and then so a quick drop down to finally a test of or absorption just above the 3,900 level, and now price is trying to increase. And we'll take a closer look at this setup in just a few minutes. We'll look at HERO, that is the Spotgamma hedging impact of real-time options, and we'll see what options traders were doing, and they were definitely helping to drive this move lower. So that made for a great short setup in the S&P 500. And there's a question in YouTube, how do you project those lines in the chart from the cloud note? So I use an add-on in the book that's available in the Bookmap marketplace called Price Lines. And here it is right here, Price Lines. And I have data that feeds this add-on, and I have two files, one for futures and one for stocks. And then this is my column of cloud notes here, this C levels. So this add-on reads those levels, marks the draws the label, and also draws the line. So all I have to do is fill out the new levels in the spreadsheet every day, and that's part of my pre-market planning and preparation. All right, let's talk about shifts in levels now. And there were quite a few, almost all bullish, especially for the NASDAQ. So let's start with the S&P 500. The volatility trigger for SPY actually dropped just 1 point from 395 to 394. And again, I've talked about the volatility trigger. And the put wall, that's the strike with the largest net negative gamma, can be expected to act as support. For SPY, it increased from 380 yesterday to 390 today, and I interpret that as bullish. And then the call wall yesterday on SPY shifted from 430 down to 397, and I don't necessarily interpret that as bearish since the 430 strike was just way out of play, and the 397 strike makes more sense. And then finally for SPX, the key gamma strike increased from 3,900 to 4,000, and that's the strike with the largest absolute gamma that can act as support, resistance, or a magnet for price. And then also for SPY, the key gamma strike increased as well from 390 to 400. So especially the increase in the SPY put wall and key gamma strike, and also the SPX key gamma strike from 3,900 to 4,000. On the surface, I interpret that as bullish. All right, then for the NASDAQ, for both the NDX and QQQ, the volatility trigger, zero gamma levels, put wall, call wall, and key gamma strike, with the exception of the QQQ call wall, all increased. So very bullish for the NASDAQ, which makes total sense given how well large cap tech stocks have performed this week. All right, let's take a look now at the gamma charts, and this will provide an illustration for what I was talking about. So here is the SPX absolute gamma levels, and this is the 0 level showing call gamma or positive gamma above that level with the black bars, and negative gamma or put gamma below that level with the teal bars. Let's just zoom in on this, make it a little bit easier to look at. So here's the 4,000 level, the key gamma strike or absolute gamma strike. They're the same thing. And then there, well, let's see, way down, I zoomed out too much, or zoomed in too much. Let me try that again. Actually, I need to do it one more time. Sorry about that. Want to make sure I get the put wall and call wall in here. So there's the 4,000 key gamma strike. And down here, the 3,800 put wall, the strike with the largest net negative gamma that can be expected to act as support. And then the 4065 level, it really doesn't look significant here, but that's the strike with the largest net positive gamma, and that can be expected to act as resistance. And the reason it is this strike, that is the call strike of the JP Morgan collar that expires at the end of the month on the 31st. So that's the SPX. Let's take a look at SPY. So now SPY, the 400 is the key gamma strike. 390 at the put wall, and that's pretty obvious, the strike with the largest net negative gamma. And then the call wall at 397. All right, let's take a look at a couple of other charts here. First of all, the combo levels, and this is combining SPX and SPY levels into one level and an equivalent SPX number. And note the put gamma again below, negative gamma below the 0 level, call gamma above, and this is the kind of a 0 level there. This is just around the volatility trigger at 39.50. So you can see the put gamma, negative gamma below that level, call gamma or positive gamma above that level. And again, that's right around the volatility trigger. And then finally, what I want to take a look at is this delta expiration, delta notional buy expiration. And this is for the NASDAQ and the S&P 500, SPX, SPY, QQQ, and NDX. And this is the March expiration right here. This is the 317 expiration. That's today. Again, showing delta, positive delta above, and put negative delta, put delta below. And note this is a put dominated expiration. The put bar is larger than the call bar. All right, let's take a look at the NASDAQ now. And for the NASDAQ, we'll just look at QQQ. And so for QQQ, the key gamma strike moved up to 305. It had been at 300 for quite a while, and now it has moved up to 305. So that's the key gamma strike. And also the put wall moved up from 285 to 290 today. the strike with the largest net negative gamma, and then the call wall, the strike with the largest net positive gamma. It remains at 310. So that's QQQ. All right, let's take a look at data now. And let's see what, there's one other thing I wanted to take a look at. Let's go back. And one thing I meant to point out is the addition of the call gamma here for SPY in the 394 to 400 level. And then also there is still a dominance of a put gamma below the 400 level. But this seems, I think this is a recent, this is an addition for today. This is new. This call gamma between 395 and 394 and 400. And again, remember 394 is the volatility trigger for SPY. All right, let's take a look at data now. And this is the founder's note, Spotgamma AM founder's note. And I look at the gamma notional every day. This is market maker's position on the gamma curve. And this is SPX in the left column, SPY in the middle column, and QQQ in the far right column. And for the S&P 500, these levels are still negative, but less negative than yesterday. So yesterday, SPX gamma notional was minus 699, and it has become less negative today to minus 548. And then yesterday, SPY gamma notional was minus 2440, which is quite negative, to minus 1430 today. And then yesterday, QQQ gamma notional was minus 276, and today it has shifted slightly positive at 20. So given the big rally yesterday and the drop in VIX, I think a lot of that put Vanna fuel that could have happened today was spent yesterday. That was a big driver, the put Vanna rally, a big driver of the rally yesterday. And what I'm talking about is, think about again the SPY gamma notional market maker's position on the curve. Gamma curve was quite negative yesterday at 2440. So traders had been paying very high prices, high VIX. VIX got up to about 29. So traders were buying very expensive puts, and when implied volatility started to drop and price increased, those puts quickly lost value, and in that negative gamma situation, traders are long puts again, market makers are short puts, and they have to sell futures to hedge their delta exposure. And as price increases and implied volatility drops, those puts quickly lose value and market makers' delta notional decreases, and they can buy back their short futures. So that was a big driver of the rally yesterday. And you can just tell by the big drop in gamma notional, especially for SPY, as well as the big drop in VIX yesterday. And then finally for QQQ, again, the increase from negative to slightly positive. Let's take a look at the Vanna charts, and that will be that's a graphical illustration of what I was just talking about. So here's SPX. What this is showing is market makers' delta exposure, delta notional, and the vertical axis, price and the horizontal axis. And this is showing how market makers' delta notional changes with changes in price and implied volatility. That's shown by the green curve. And this is showing that market makers' delta notional will increase, and this is for today. Still, market makers' delta notional will increase as price drops. So at least with the S&P 500, market makers still position on the gamma curve is still negative, and they still have to hedge in the direction of price to hedge their delta exposure. And then the green curve is showing how that delta notional changes with changes in implied volatility, and that's the Vanna effect, the change in delta with a change in implied volatility. And we can see how this has changed from yesterday and the previous day, so becoming less steep. Then here's SPY. This is for today. And here, that's a pretty significant change from yesterday to today. And this black line is showing how market makers' delta notional changes as time passes, and that is the charm effect, the change in delta as time passes. And then finally QQQ, notice very neutral today. All right, so that is the that's the gamma notional. Finally, let's wrap up the positional analysis here with the key gamma strike. This is for today, key gamma strike list. And this is comparing yesterday, and we looked at this before. This was in the current key gamma strike from yesterday. And so I shift this D column over to the E column, and then I enter the new values today. So notice all of the green here, all these key gamma strike increases from the previous day with the VIX dropping. So all of this is bullish. So this means that traders are anticipating, expecting higher prices, and they're positioning themselves at higher strikes in the options market. Okay, so that is that's the positional analysis, and given all this, normally my thesis would be bullish, except this is a large expiration. So end of week, end of month expiration, and traders have been buying calls all week. Some of the large cap tech stocks have risen by double-digit percentages this week, large increase. So my plan was a little bit different. So if I saw all of this earlier in the week, I would definitely be bullish. But at the end of the week, especially in these large cap tech stocks, I was looking for a call gamma unwind. So what that means is that traders have been buying calls all week. You look at AMD and Meta buying calls all week. These a lot of these stocks have calls at current prices or much higher, and if traders start selling calls and or price decreases, these calls quickly lose value. And remember, market makers, as traders buy calls, market makers are selling calls, and they have to buy stock to hedge their delta exposure. Now, if traders continue to buy calls today, then this call gamma unwind may happen on Monday. And again, what that is these calls lose value as expiration approaches. That's the charm effect. Change in delta as time passes, and it accelerates closer to expiration. These calls lose value, and market makers can sell their long stock hedges. They don't need them anymore. Their delta exposure is decreasing. And let me show you what I was talking about, what I'm talking about. I don't know why this page does that. All right, so what this is showing is a couple things. Let's take a look at Apple first. So first of all, I'm showing this is Spotgamma Equity Hub, showing next expiry gamma percentage. So that's the amount of gamma that is expiring at the next expiration. And we can see over here that next expiration is today. So this is showing all of this gamma expiring today. And anything over, according to Spotgamma, anything over 30% is significant. So for all these stocks, the gamma expiring today is greater than 30%. So what I did, I looked through this list and I see this. This is the Equity Hub composite view chart showing put dominance in red, and that's below the 160 level. I don't know if you can read that or not. It's maybe a little bit difficult to read. That's the 160 level. And then call gamma above that level. So these calls, if traders are not buying more calls today, these calls that expire today are quickly losing value due to charm, and market makers can sell their long stock hedges. So there's Apple. So this was on my list, call gamma unwind list, looking for shorts. Same for AMD. This lighter kind of orangish red indicates the position size is not as large as we saw on Apple with the dark red and dark green, and the scale is shown here, but still showing below 97, put dominance, call dominance above the 97 level. So that stock was on my list. The next is Amazon, and this is the 101 strike, showing put dominance below, call dominance above. Meta 200 level, put dominance below, call dominance above. Microsoft, that pivot line at 275. And then finally Nvidia, and that pivot line is at 255. And that's also the key gamma strike for Nvidia. So all those stocks were on my list looking for shorts today. All right, there's a question in YouTube. Do you think today's call gamma addition may be stock replacement strategy? It could be. I guess that really doesn't come into play in my thinking. So my thinking is that traders are buying. This can, in a bullish market, this can happen every week. Traders buy calls that expire at the end of the week. So in the beginning of the week, you want to look for bullish setups. You want to look for stocks that where traders are buying calls, and you can buy calls, that expire at the end of the week, and you can hold them or take them off at the end of the day, or you can buy shares for a day trade or a swing trade, and then anyway, at the end of the week, those calls start to lose value, and market makers, again, have been buying stock to hedge their delta exposure. They no longer need those long stock shares to hedge for their delta exposure, and they can sell their stock. So that's what I was looking for today. All right, and that's the list of stocks that I was looking at. So let's um, go to Hero now. And sorry about the refresh there. I thought I had fixed that in Chrome. So anyway, let's start with actually the thing that I want to start with is this hero signal, and I posted this in Discord, and let me show them. This is what I posted at around 10 a.m. and I post this almost every day in Discord. This is the list of stocks, my hero watch list. And what I was noting here, this is in alphabetical order, but I was looking at the weak signal in Meta. So again, remember, Meta was on my list, and had a weak signal, a hero signal in the morning. So this is showing that it's in, I'd say, about the 20th percentile for the last 30 days, and maybe about the same for the last 5 days, shown by this colored slider here. So looking at that in the morning, so that was my starting point. So actually, let's take a look at, we'll take a look at Meta first. And notice now I'm ranking this watch list by the weakest signal. And notice now that here this hero signal is very weak for NVIDIA, SPX, Meta, QQQ, Tesla. All right, so let's start with Meta, and then we'll look at the other stocks. So there's Meta, and that was just a very, this was just a setup where everything comes together. Let's zoom in on the morning. So here is Meta. Hero signal dropping from the open. Traders are taking short delta positions. And we'll take a look and we can take a look right now. So let me just show you where this set up the short. So price rising with hero dropping, and then this was the short setup right here on the trend break. So we can separate out the puts and call signals. So this is exactly what you want to look for with the call gamma unwind, is traders are selling calls. They've been buying calls all week. They're selling calls today. So market makers don't need to buy stock because traders are selling calls today. They can sell stock because traders are selling calls today. And then they can also, the calls that traders have been buying are quickly losing value if traders are not selling them already. All right, let's take a look at Bookmap now. We'll go to Meta. And sorry about the dots here. This is there was a very large opening print on just about everything today. That's shown by this huge green dot showing the opening print. And I'm going to zoom in on this morning session here. one other thing I want to take a look at is this cumulative volume delta. Now this opening print obscures it, but you can see the shift from these green dots, and then so market buy orders coming in, and then a shift to more pink dots, market sell orders, just below the 202 level. So absorption just below that level. And there's the trend break. And again, remember, hero is negative. Traders are selling calls. And then price reverses lower. And there's the short setup with targets. First target at the 200 key gamma strike, key delta strike. And then liquidity targets below at 199 and 198. So this is a setup where everything came together. Your plan, the hero signal confirmed it, and then price action and the actual hero on the chart confirmed it as well. Okay, Bartos, I hope I'm pronouncing that correctly. You're welcome. Thank you. Thank you for your kind words. All right, so there was the setup in Meta. All right, let's take a look at some other stocks, and we'll go back and just go through these one by one. And again, sorry about the change in dots, but the huge opening print kind of obscures everything else. So there's Apple, and let's go take a look at Hero now. And just in case anybody's not familiar with this, this is Hero, the Spotgamma hedging impact of real-time options. The blue line is showing puts, and the orange line is showing calls. These are shown in terms of delta. So a falling blue line means that traders are buying puts, and a falling orange line means that traders are selling calls. And then there's the combined signal. Definitely bearish. Traders are taking negative delta positions. And let's go take a look at Apple. I'm going to put this back in alphabetical order. Take a look at Apple. And the signal was not as clear in Apple, but definitely definitely a bearish confirmation here just after 10 a.m., just after the consumer sentiment data. Let's go take a look at Bookmap again. There's Apple, and you can see the same shift in order flow. Green dots above, pink dots start come in at the 156.50 level, and then price moves lower down to the 155 call wall key gamma strike level. And then price seems to be oscillating up and down around that level. One thing that we can do is, well, we'll leave it at that. So there's a short setup in Apple, again based on the plan confirmed by order flow and hedging flow. Let's take a look at AM. I think no. We looked at Meta. We'll look at Apple. Let's look at NVIDIA. AMD was not as clear, so we'll go to NVIDIA, and there's NVIDIA. Same shift in order flow right after the consumer sentiment data shifts from bullish to bearish. Price targets at the 260 call wall level, and let's scroll and zoom down just a little bit, and then there's the a couple of larger price targets if price continues lower at the 256 level, and then the 255 key gamma strike. And order flow has definitely been bearish all day except for the right at the open. CVD falling all day, and notice all the pink dots there, market sell orders. Let's go take a look at Hero and see what options traders are doing in NVIDIA. And again, note the weak Hero signal here. Now Hero is, whoops, wrong tool. Hero is as weak as it has been in the last 30 days and weaker than it has been in the last 5 days. Weak Hero signal. And there's very often a very strong correlation between options trades and price action in NVIDIA. Let's just see what traders are doing. So they were selling calls and buying puts. Started right after 10 a.m. and price started to move lower. So another setup confirmed by your planning process, the call gamma unwind confirmed by order flow and hedging flow. All right, let's take a look. Here's QQQ. Let's just take a look at Equity Hub. That was really not on my list, but there is some insignificant call gamma. But with all these tech stocks dropping, it's you can certainly expect QQQ, the index dominated by those stocks, to respond as well. So another way of trading it, strong correlation between hedging flow, options trades, and price action. Let's take a look at Bookmap. And the same, really kind of the same order flow here. Strong run up right after the 10 a.m. data, ending with a buy sweep. Those very small bright green dots up into the 309 C1 level. That's a combo 1 level, meaning it's ranked from importance from 1 to 5, 1 being the highest. So a significant gamma level for QQQ and NDX combined, and then the shift in order flow from green dots to pink dots, bullish to bearish. 305 key gamma strike was the first target, and then price dropped down lower. It now seems to be potentially heading lower again. All right, let's take a look at Tesla, and then we'll wrap it up with the S&P 500. So note Tesla was not call dominated. We'll take a quick look in Equity Hub at Tesla. Actually, it was above the 200 level. So some calls, but not as significant as the other stocks that we looked at: Meta, Nvidia, Apple. Let's take a look at Hero. Another weak signal. And there's always a strong correlation between hedging flow and price action in Tesla. So in the morning, traders were selling calls and buying puts. Let's go take a look at Bookmap. And here Tesla dropped down lower initially, did a retest of the upper edge of the expected move, and then shifted lower. And cumulative volume delta has been decreasing all day. And the shift in order flow here is not quite as apparent as some of the other stocks that we looked at. Let's zoom in on. Whoops. Zoom in on the morning session. So still readable here. Very bullish order flow up into just a couple minutes after the data. Absorption there shown by that pink number. And then order flow shifts bearish. The price dropped down to the first target at the 182 hedge wall. Note the liquidity there, and then the 180 key gamma strike, and then also the high liquidity at the 178 level. All right, let's wrap it up with the S&P 500. Let's take a look at SPY. We've already looked at the ES, S&P 500 futures. So there's the same reversal right after the consumer sentiment data, the buy sweep going into the 394 volatility trigger, and then the shift lower. Let's go take a look at Hero. And here note the support levels at there's the 3900, SPX 3900 right there, price trading below that now, and then the 390 SPY 390 put wall. So remember, the put wall for SPX is at 3800, but the put wall for SPY is at 390. All right, let's take a look at Hero, and then we'll call it a day. So here is I'm not sure why it's showing all this. There we go. S&P 500. This is showing a combined signal for SPX, SPY, and XSP, which is insignificant compared to SPX and SPY. So this is showing traders are taking negative delta positions all day in SPX and SPY. It leveled off here from around 10:30 to 12:30, and then has resumed lower. But the trend overall is definitely bearish. Let's just see what traders are doing. So this is they're actually buying puts and selling calls, net selling calls, and the puts are definitely in control here. You can look at this notional value for puts at 2.74 billion compared to 500 million, and you can see that that results in a combined signal that is definitely bearish. Traders buying puts and selling calls in the S&P 500, SPX, and SPY. Okay, so my time is up. I want to thank you for your questions and comments. Yeah, well, let me see. I see a couple of questions, comments in Discord. So RJ asked, when you ranked by hero weakness, is that a real-time analysis of hero? That is real-time. So note the change in hero signal from what I posted this morning. Now these signals are weaker. So this is real time. Every time you refresh this page, this should update. So it's real time. And this does not come into play pre-market. This hero signal is not displayed until the market opens. So this is part of the execution process, the second step of my process. The first step is looking at the positional analysis. Again, for stocks, the key gamma strike list, looking at equity hub, like I did. That's exactly what I did this morning. I looked at equity hub. I looked at all the stocks that were call dominated. I wrote those down, and those were on my list to focus on today for a call gamma unwind. All right, there's another question. Does not being call dominated mean you can take shorts or be bearish in general? In general, no. This comes into play especially on options expiration, a Friday expiration, or even more so on a monthly expiration like today. So this is the time when I'm looking for shorts and call dominated stocks. Okay, so RAN YouTube asks, is that now Bookmap software that you were showing the hero chart? No. So what I'm showing right now is Spotgamma Hero, and this is different from Bookmap. So I use two tools. I use Bookmap for order flow and showing levels, and then I use Spotgamma for my positional analysis. That's the static part of what I do, and that happens before the market opens. And then Hero here, this is available to Spotgamma Alpha subscribers, and this is part of my real-time execution. So this is Spotgamma Hero. It's web-based, and this is Bookmap. And RS indicates resolution is too bad, and I suggest if you're watching in YouTube, change your settings. So you can go to the quality settings. In my YouTube, it's showing like a gear. You click the gear and you can select up to 720p. At least that's what I'm showing here. And if that doesn't help, then I invite you to join us here in Discord. I haven't had any complaints about resolution in Discord Bookmap Discord. It's free and available to all, whether you have a Bookmap subscription or not. So just go to the Bookmap website and look for the link for joining Discord, and you can join us there. Okay. And there's another question in Discord. In other words, is it better to take longs when a stock is call dominated, and puts when put dominated? And not necessarily. It's better to take longs when traders are buying calls, and better to take shorts when traders are buying puts. So for almost all of this year, the SPX, SPY, the S&P 500 has been put dominated, and there have been great longs and shorts. So I don't think you can look at it that way. And these stocks being call dominated is not that common this year as well. It just happened this week. Traders were buying calls all week. So that is, again, that has been pretty rare this week, that stocks being call dominated above a certain level. All right, so I'm day trading. I'm looking for, I look at Equity Hub for my pre-market planning, but I am looking at Hero, hedging flow in Hero, and order flow in Bookmap to confirm my thesis and my setups. Okay, so I'm way over time. Thank you very much for watching. Thanks for your questions and comments, and I will see you next week. Thanks again. Bye.